trading session. Let's welcome our guest, though. We have Siddarth Bhamre, Head of Institutional Research at ACMIIL Mehta Investment, who joins us on the show. Hi, Sid. Good morning. Good to see you in after a while. Tell us, what is your take on this? Exchanges clearly are nervous with regard to these changes that could come about. According to you, what is the volume hit if these changes come about?
Good morning, Nigel. Always pleasure to have to be on your show. Now, this topic of derivatives is close to my heart, and I have very strong opinion, but I would like to put it as mild as possible. So, to answer your question, if this happens, then we might see a dip in volumes because there are a lot of people who are now full-time employed in market, and their earnings come from trading on weekly options. Needless to mention, SEBI report is also out that most of these people end up losing money. Nevertheless, volume would take hit. I want to say that, 10 to 15 years back, our derivatives market was more evolved, where we have dated securities, I might say dated long contracts, not just monthly, but in options and futures of index, we had 1 year, 2 year, 3 year contracts, and we had wonderful structure products in market, which has all disappeared. So I think we didn't evolve, our derivative markets didn't evolve in last 10, 15 years. In fact, it has taken more of a quantitative approach. If you look at India's market cap, listed market cap is 5% of global listed market cap. But our derivatives market is the largest market by very high margin in this world. So structurally, our markets were not right. And I hope that, we go back again to those days, 10 years back, and probably evolve further. And yes, volume would take hit if we go in that direction. But volume is not everything. People need to trade well.
Siddarth, allow me to come in. Morning. What is the hit to volume, according to you?
It would be substantial. Firstly, we need to see, Prashant, that whether we are doing away with weekly for everything or, for few index only, whether we are coming out with a fortnightly or only monthly. Because if it's fortnightly, then the hit would be probably less. But if it's only monthly, then it would be significant because people are trading day in and day out. And generally what happens in a monthly option, if the volatility is not significant, the time decay, the volatility don't move the premiums much. At least time decay doesn't move much. And that would not make daily trading viable for option traders if markets are not giving any directional move. So obviously, if there is no volatility, volumes would come down irrespective of the capital or the capital constraints.
Yeah, Siddarth, hi, morning. Your overall point was interesting that you used the word we were a more evolved market 10 years ago because you had deep out of the money options, you had products which could go on for very, very different time durations. So as someone who's been in this market for so long, what is it that you're actually advocating for? You're saying that take the near-term hit. But, don't a lot of other global markets also offer weekly or fortnightly products? So what is it that you're advocating should be the path forward? So we do have a deep, evolved and a mature F&O market. And a safe F&O market, may I add?
Yes. See, purely from risk management perspective, our markets have evolved. Credit to risk management stuff over there, but from products per se, I think we are not evolved. And what I've been against weekly options, but not probably perpetually. But our market had not evolved. If you look at today, also most of our trades are in index options, and that too in weekly. Monthly contracts hardly see any open interest. Look at what is happening in stock options. Barring 5-6 large cap stocks, there's hardly any volume in stock options, and we see recommendation coming on illiquid stock options left, right, and center. What I suggest is, I understand there are compulsions now. Mutual funds are launching SIF where 25% of the portfolio can be on the short
is
side.
Possible, yeah.
So this is all structured, Surabhi. Means I don't want to talk more on that because I might say something which I should not. So that's the reason we are seeing now that, regulators talking about we should have long dated options. What took you 10 years to understand that people are losing money and, the structure of market has been spoiled. So it is all
so basically instead of near-term speculation, instead of near-term weekly speculation, you're saying that having longer dated options perhaps would be the way to go.
yes, we go back to monthly. We go back to all those dated options, 1 year, 2 year, 3 years. So if you remember, there were so many bigger companies which had beautiful structure products where we used to have participation in Nifty dip. So all those things should come back, and eventually when market get matured, then probably selectively you come out with short dated options also.
Like in the market, there are two people on each side of the trade. On this topic also, there are many people on both sides of the trade, both sides of the argument. And we'll get you as much opinion as possible. That's what we can do. So stay with us, right? I mean, here, of course, we're talking about a little bit of here and now in terms of